Welcome back, Oni-Chans and anime freaks. It is nice to be back with you. This will be an anime edition on CSEC Everything Business. So the topics that will be covered in this anime edition of CSEC is POA, OA, Economics and Principle of Business. So we'll be doing audiobooks and such alike. And this is my contact information. It's right there. And thanks for everything, guys. Please subscribe. This is very easy. See you guys out on the next video.
いきますよ。
いただきます。いただきます。食べかわいすぎる。ってあれおーい勝負あり。
Konnichiwa, welcome back to the Study Prep Guys Anime Edition on POB. Welcome back, everyone. It's nice to be back with you. Without further ado, let's actually start. Today we'll be looking at all terms and concepts for the POB. This will be a POB marathon. Hello anime freaks, it's nice to be back with you. Today we'll be starting back a new brand video on the POB marathon continuation. So before you start, please subscribe before this happens.
Give it back now. Noah! Larry, what the hell are you doing?
Larry!
Larry, you can't just... Oh,
Larry! Oh, are you alright? How did you...
Larry! Righto.
Coming soon to Fox to... Ow! What the...
So let's start. So the first term that we'll be looking right off the bat is entrepreneur. An entrepreneur is someone that creates or makes a business or makes an investment in a business in the hopes of creating a business or making a profit. The types of business usually includes the public limited companies, which are owned by the government, the private limited companies, which are owned by private individuals and are funded by them. Then we have conglomerates, which is like a unique type of business that we'll discuss. And then we have the cooperatives, where there are usually no profit incentive and is usually created by members of the business. Usually the persons are not really that skilled, but everyone within the business usually has a share of the business. Usually they have interest, and cooperatives, unlike the sole proprietor or any other business, is not profit driven. Then we have the sole proprietor, which is created by one person and is funded by that one person. That persons bear all the risk and all the losses within the business incurred. Then we have functions of money, which is, first of all, let's start off with a medium of exchange. It is used to exchange. It is used for the purchase of goods and services. And then we have the store of value, which is in the case of it having a somewhat store of value, meaning that it could actually be exchanged for something else of equal value. So thanks for watching, guys. Short video. See you guys in the next video. The Study Prep Guy is out. Our nature of economics, and the following is on the screen. Without further ado, let's start this marathon immediately. So right off the bat, this is the CSEC audiobook for Econ. This is the final product of my long video on the full course in economics masterclass. So let's start. So first of all, let's look at the central bank. So let's look at that. So the central bank is owned and operated by the state, meaning that everything, it is the bank of banks, to say in a nutshell. So let's look at commercial banks now. So a commercial bank is a business that provides financial services for profits. It acquires the funds used for lending through deposits, meaning that they take interest. Now let's look at copyright. Consumer expenditure. So copyright is basically, in the case of you taking someone's content, someone's right to defend their own content in the form of writing, in the form of letter. In, for example, with CSEC actually has copyright policies which they can impose on individuals. So let's look at consumer expenditures. This is the total amount of money spent by consumers on output produced by producers. So the total amount of money spent by consumers is known as consumer expenditure. Now let's look at consumption. So when consumers consume goods and services to satisfy their wants and needs, when we utilize goods and services to meet our acquired wants and needs, that is known as consumption, which is consumers. Now let's look at cost push inflation. So cost push inflation is an increase in price of goods that occurs because of an leftward shift in supply curve of goods and services. So when there is a decrease in supply, that will increase the price. Now let's look at current account deficit. So a current account deficit implies that all the inflows in the current account are less than the outflows. So when there's a more amount of inflows in the current account and there's less outflows, that is what we call a current account deficit. Now let's look at cyclical unemployment. So as national income changes, the amount of production and the amount of people change. So if the amount of income in the national treasury decreases, public sector workers will be put off. Now let's look at that. Now let's look at something called abnormal profits. And this is very interesting to note. So let's look into that. Abnormal profits refer to any profits earned in excess or over excessive profits than your standard profits. If your standard profit is $200, you make an abnormal profit of $1 million overnight. That is what we call abnormal profits. So let's look at domestic debt. So the total amount of money owned by the government to its citizens is known as its domestic debt. So the amount of money that the government owns to its consumers or its citizens is known as domestic debt. Now let's look at fractional unemployment. So this is due to people changing their jobs. And that's what we mean by fractional unemployment. Meaning that people move from one set of jobs to one more specific jobs. In the case of an economy, majority of people move into the private sectors, and the public sectors could be an example of fractional unemployment. Now let's look at retail cooperatives. So retail cooperatives are a group that seek to buy goods at an advantage and distribute it efficiently, meaning that they seek to buy goods at a lower price and sell it at a reasonable price so that they could make a profit. Now let's look at surpluses. Surpluses are caused when price in the market above the equilibrium price, leading to less demand and more supply, meaning that the higher the price of a good or service, the higher the supply will be and less the demand will be. Now let's look at regressive tax structure. So regressive tax structure is decrease in the proportion of income paid as tax when income increases. So the higher the amount of money you have within your bank account, the less they will tax you. And the less money you have in your bank account, the more they will tax you. Now let's look at real wage or cyclical unemployment. Real wage or classical unemployment, we would like to call it, is another term for real wage, Is unemployment caused by wages being held above the equilibrium price, which is surpluses, or below equilibrium price, meaning that the price is too low and usually people don't want to work for less money, or money that is lower than the normal income to survive. Now let's look at macroeconomics. So macroeconomics studies the economy as a whole and deals with issues relating to the entire economy, meaning that they look at things that affect the economy as a whole. Now let's look at market equilibrium. So this occurs when consumers and suppliers agree on the price and quantity of the good or service to be traded, meaning that they both agree to buy or sell a product at a particular price. Now let's look at market disequilibrium, which is the exact opposite of market equilibrium. So market disequilibrium occurs when the price in the market causes quantity demanded by consumers to be unequal to the quantity supplied by the producers. This could be the case of the suppliers oversupplying goods, meaning that the quantity demanded will be less, or they are undersupplying goods, meaning that the demand will be extremely high. Market disequilibrium, meaning that sometimes the suppliers will sell a good higher than the consumers want to or intend to buy that particular good for that price. So let's look at negative externalities that occurs in markets. So costs faced by third parties that are not directly involved in the consumption or production of the goods or services are known as negative externalities. So negative externalities occurs when costs are faced by third parties. In the example of, for example, oil prices going up not only in your country, but it's when you're exporting the good to other countries, the price of that oil is being extremely high in that country, affecting that country as a result of that. So it's not only affecting the citizens of your country, but it's affecting citizens of other countries due to probably low production levels. So now let's look at marginal costs. So marginal cost, also known as MC, can be defined as the increase in cost as a result of producing one more unit or of output. This is resulting since they did produce an extra unit, they will have to increase the price in order to make a profit, and that will increase the cost marginally. Now let's look at inelastic demand, which is our last concept or the last term that you need to know for CSEC 2025. It's very simplistic to understand. When demand is inelastic, the change in quantity demanded will be less than proportionate to the change.
I'm scared. It feels like you don't care. Light in me, my dear. Why am I still here? I don't mean to be compensated with the decisions you made, but why? In the back of my mind, you died. And why didn't even cry? No, not a single tear. And I keep on waiting patiently for someone that won't even write. I kill you, and I didn't even regret it. I can't believe I said it, but it's true. I hate you.
騒がしい日々に笑えない君に思いつ
Konnichiwa, welcome back to the Prep Guys Anime Edition on Principle of Accounts. Oni-Chans, no one's failing today for PA preparation for CSEC 2005. It is nice to be back with you for this video. So this will be a full marathon on POA, every concept and term that you need to know. So first, let's start off with concepts and purpose of accounting. So there are two types of users of accounting information, mainly the internal users and the external users. So internal users refer to individuals who run, manage, and operate in the business. This includes managers, staff, supervisors, and employees. Then we have external users. External users, these are basically the people outside of business, example, customers, investors, etc. They are basically people that would usually be outside of business. Then we have purchases and invoices. Let's look at purchase and invoices. Invoices are used by businesses for transparent record of products and services and payment terms. An invoice is usually signed by a receptionist or someone within the business to actually promote and actually say that this person has bought this good. This is an example of an invoice. Let's move on to the debit note. So this is a credit note example. So a credit note is a document used to cancel and reduce the amount of an issued invoice. So if you owe someone, you have a credit note, then you have to repay that. Then we have the bank reconciliation, which is very important to urban economics. Let's start. So a bank reconciliation statement is a statement that a company prepares at a particular date that compares a company's cash balance to its bank balance. And this is an example of a bank reconciliation statement. Now let's look at the impress system. So the impress system is one in where the cashier gives the petty cashier enough cash to meet the petty cash needs for the period. So an impress system is basically a system of reimbursement of money so that the petty cashier could basically do their business. Let's move on. So this is an example of the impress system. Then we have the petty cash book. So a petty cash book is basically small cash transactions. Unlike the cash book where they have big cash transactions, in the petty cash book, they're usually small cash transactions to say in the most simplest of terms. Then we have depreciation. So a reduction in the value of an asset over time due in particular to wear and tear. So the good decrease in value over years, meaning that they can't sell it at the original price. They will have to sell it at a depreciated or a lower price. Then we have the accounting concept, which usually include the accrual or matching concept, the prudence concept, and the accrual or matching concept make sure it's basically trying to say that with every debit entry there must be a credit entry, meaning for every inflows there must be an outflow. Then we have the prudence concept, meaning that the cash book should be neutral. Both the cash book should be neutral, meaning that it should not be overstated or understated. It should be neutral. Then we have the concept of consistency, meaning that we have a consistent means of accurately measuring our profit and losses within the business. Then we have separate entity or business entity, meaning that the business is a totally separate entity from that of the business owner. So the business owner and the business itself are two separate entities. Then we have the accounting cycle, which is the last term that you need to know. So the accounting cycle usually includes the source document, then it posts it to journals, then ledgers, then you do your trial balance, and then you have your financial statements. And this process is overdue over and over again. So by the way, subscribe to the Study Prep Guys Chill Zone. This is the CSEC Anime Edition. Nice to be back with you guys. See you guys on a next video.
1, 2, 3.